Bitcoin tagged 90,000 and then politely stepped back like it remembered it's December. Altcoins didn't collapse, liquidity didn't vanish, and the market didn't break. What we're watching right now isn't fear, it's digestion. Today we'll walk through the market structure, the sentiment signals, and then connect it to the two forces that actually matter next year: regulatory clarity and global liquidity. Because price moves fast, structure moves slow, and the slow stuff is what creates new all-time highs. I'm SENB, and this is your SENB Daily Brief for Monday, December 22nd, 2025. Let's start with the market.
You're listening to the SENB Daily Brief, powered by Whole Shot Coffee.
All right, let's take a look at the numbers. Bitcoin briefly reclaimed 90,000, and then did what strong markets often do in December. It paused. Right now, Bitcoin is sitting just under 89,000. On the weekly chart, this is not a breakdown. This is a controlled pullback after a powerful impulse move. RSI is cooling into the high 30s, a level we've historically seen during trend resets, not trend reversals. MACD remains negative, but importantly, it's flattening. That tells us momentum is slowing, not accelerating to the downside. Ethereum is holding just under 3,000. It's consolidating near long-term moving averages, an area ETH has repeatedly used as a base in prior cycles. RSI in the low 40s confirms the same theme we're seeing in Bitcoin: neutralization, not stress. No structural damage here. XRP has pulled back toward the 190 range after a strong run. This looks far more like profit-taking than a loss of confidence. The broader trend remains intact. This is compression, not capitulation. Solana is trading around 125. RSI near 37 and easing MACD tell us the same story as the rest of the market: cooling. But here's the important distinction. Solana continues to attract relative inflows even during this pause. That matters. Now let's talk sentiment, because this is where people start to confuse emotion with information. The fear and greed index is sitting at 29. Yes, that's fear, but this is not crash fear. This is post-rally hesitation. It's the kind of fear that shows up when markets stop going straight up and people start asking, was that it? The altcoin index is at 17 out of 100. Participation is narrow. Historically, this does not happen at market tops. It happens before broader expansion. Low participation isn't weakness, it's selectivity. Across Bitcoin, Ethereum, XRP, and Solana, we're seeing the same thing. No panic, no cascading failures, just a market that's digesting gains. Price moves fast, structure moves slow, and the slow part is still intact. So if the market structure is holding and sentiment is cautious but not broken, the next question becomes obvious. What actually pushes this market forward in 2026? That's where today's news comes in. Today's stories all point to the same two forces: regulatory clarity and global liquidity. We'll look at Bitcoin's push toward 90,000, altcoin inflows during broader ETP outflows, central bank policy shifts, and why emerging markets are suddenly back in focus. That's coming next after this.
You're listening to the SENB Daily Brief, powered by Whole Shot Coffee.
Okay, welcome back. Now let's start with Bitcoin, because that's where the attention always goes first. Bitcoin briefly touched $90,000 and then pulled back. That move alone triggered two completely different reactions. One side called it a failed breakout. The other called it confirmation. Here's the reality. Holiday liquidity is thin. Options expiries are heavy, nearly $29 billion rolling off. And price discovery near round number levels is never clean. A pullback after tagging a psychological milestone isn't weakness. It's price doing what price does. Zooming out, the broader crypto market posted gains over the last 24 hours. And interestingly, one of the strongest rebounds came from NFTs. Now, that doesn't mean NFTs are suddenly back in a full bull run. What it does signal is risk appetite quietly returning at the edges. NFTs tend to move early, either as speculative excess or as early signals of renewed participation. Right now, this looks more like the second. Now, this next one matters. While crypto exchange-traded products saw nearly $1 billion in net outflows last week, XRP and Solana still attracted inflows. That tells us something important. Capital isn't leaving crypto, it's rotating. Large allocators aren't exiting the asset class, they're repositioning within it. That distinction is critical. Now, let's talk big picture. The Bank of Japan's cautious tightening has extended Bitcoin's recent rally. Why? Because global liquidity doesn't move in isolation. When one of the last major holdouts begins adjusting policy, markets recalibrate expectations everywhere. Crypto responds not just to U.S. policy, but to the direction of global monetary coordination. And finally, regulation. The FDIC's Genius Act is being framed as a stabilizing force for the industry. At the same time, Brazil is reporting continued growth in crypto adoption. Put those together and you get a familiar pattern. Clearer rules in major jurisdictions and rapid adoption in emerging markets. That's how asset classes mature. When you step back, today's news isn't chaotic. It's consistent. Bitcoin testing major levels. Capital rotating, not fleeing. Liquidity quietly re-entering the system. And regulation slowly becoming less adversarial. This isn't the behavior of a market topping. It's the behavior of a market setting conditions. So, if the structure is holding and the narrative is shifting, the real question becomes, how is the community reacting to all of this? That's where your messages come in. The Proof of Thought mailbag is coming up next after this.
You're listening to the SENB Daily Brief, powered by Whole Shot Coffee.
All right, let's check in with the Proof of Thought mailbag. This is where we step away from headlines and listen to how the market feels. This first viewer writes, this pullback feels different. There's fear, but it doesn't feel like panic. That's a sharp observation. Panic is fast. This isn't fast. This is hesitation. And hesitation shows up when participants are uncertain, not when they're convinced the trend is broken. Another question coming in, is this just another bull trap? A fair question. Bull traps happen when liquidity dries up and momentum collapses. What we're seeing instead is liquidity shifting, not vanishing. That's a critical difference. At CryptoTrader420 asked, why does fear spike every time Bitcoin stops going straight up? Well, it's because markets train people to expect instant gratification. Real expansions don't look like straight lines. They look like pauses. They look like doubt. They look exactly like this. Okay, this one stood out. If this is bullish, why doesn't it feel good? Because conviction is uncomfortable. Euphoria feels good. Structure feels boring. And boring is usually where trends are built. So, what do these messages all have in common? It's not fear. It's uncertainty. And uncertainty lives in transition phases, when narratives shift, but prices haven't caught up yet. That's where we are. So, the structure is holding, liquidity is repositioning, and sentiment is undecided. Which brings us to the bigger picture. We'll wrap it all up in the final thought when we come back.
You're listening to the SENB Daily Brief, powered by Whole Shot Coffee.
And we're back. So, let's bring this together. Markets pulled back, sentiment slipped into fear, and the headlines got loud. But underneath the noise, nothing structural broke. Bitcoin didn't lose trend. Liquidity didn't disappear. And regulation didn't reverse. There are two variables that matter right now: clarity and liquidity. Clarity is moving forward, slowly, imperfectly, but forward. And liquidity is repositioning, not exiting. That combination doesn't create tops, it creates bases. Fear doesn't mean failure. Fear means uncertainty. And uncertainty shows up when markets transition, not when they collapse. If this were over, you wouldn't be feeling confused. You'd be feeling convinced. So what matters now isn't price targets, it's behavior. Does liquidity stay engaged? Does regulation continue to clarify? Does fear fade without panic? So far, those answers are still intact. That's where we'll leave it today. No hype, no panic, just structure. If you found this useful, hit the like. Subscribe if you want calm, structured context daily. And as always, stay curious, stay grounded, and we'll see you tomorrow. The SENB Daily Brief is a production of SENB Hero Media in collaboration with Whole Shot Coffee, coffee that fuels champion. Written and hosted by yours truly, SENB Hero. Production editing and scheduling handled by Maya Valencia, who somehow keeps me on time, caffeinated, and occasionally polite. Original theme music composed and produced by Paul Hahn, the community legend whose beats hit harder than a Fed rate hike. Research support provided by the SENB community. Proof that sarcasm and spreadsheets can coexist. For more shows, merch, and on-chain chaos, visit SENBHeroMedia.com. Thanks for tuning in. Stay caffeinated. And remember, if it's not in the brief, it probably wasn't bullish anyway.
Set my wallet free.